Or it will come. I got that.
Because okay, so individual is just an income together.
Yes, if it is payable by so we needed to state that the tenant is. You needed us to state that the tenant is a component.
Yes.
Then the rate will be. If the tenant is an individual, what will be the rate?
It's no rate.
Is that not an answer?
It's an income in the hand of the landlord.
So I understand. You understand? I understand that you need to be specific.
Yes.
To be able to get 10%, you need to say the company.
Yes.
You understand? Or if it is an individual, it is now no percent.
Yes.
Do you understand? So or 0 rate. As a case but because it's not specific,
Actually.
the answer is ambiguous.
Yes.
So if someone said 10% is correct. If someone said nothing is also correct. But if you don't answer it, you also correct.
Anyone who puts 10% in that question, you must be back into
Okay, go on.
Yes. Once you decide to say the rate that the landlord will expect is 10%, you have to say if the term is strategic so that your 10% will stand there as answer.
What about the person say 0? What about the person say no rate is supposed to be charged?
No.
Will you put an explanation? I know that I have been a couple of times told that I could be able to do good teaching in school. If you were my student and that question came up, you will pay. I'm not joking because if you say 10%, you're not wrong. If you say no percent, you're not wrong. If you don't answer the question, you have failed the question, the original question that say I said all. Yes. So what I just understood now is that question needed to be specific in who the payer is.
Yes.
So if it's an individual or it's a corporate body,
Yes.
And if it is not specific, do you understand? That gives room to 2 answers.
Yes.
Because there are only 2 answers here.
Yes.
Either to 0 or
10%. Yes. That is correct.
You understand? That's what I'm saying. If you say 0%, you are not wrong. If you say 10%, you are not wrong. However, if you don't answer, you are wrong. Okay, that is that about that. Thank you, and it's interesting. Thank you for helping us to. We'll adjust that question because we're going to ask it again as our post. But the idea is you should know it.
If it is asked in another way now, it's not for you to test.
The idea is for you to know.
Yes.
Yes, it's not that you pay.
We are sure now.
Okay, so what is withholding tax? I'm not sure that we needed to even hit too much on withholding tax because it looks like we have answered all of these questions here. Withholding tax are actually deducted from income of individuals or corporate bodies that have provided services. In this case, in the case of Adamawa State Internal Revenue Service, which we are doing audit, our job is to confirm if withholding taxes have been deducted and the ones that are supposed to go to the state have been adequately remitted. I can tell you that FIRS will always come to you if you refuse to pay, either to individual or to state government. They tell you that you have to pay. So either you have remitted and deducted and you have not paid, Go and pay. That is how they do it. Yes, both individuals and corporate bodies, you have to pay. Then, so the primary purpose of withholding taxes, withholding tax audit, is to verify taxpayers have reported the correct amount of tax held. Reviewing, so how do we go about that? You review the taxpayers record and you do, if there are additional methods to do that, you need to observe keenly to be sure that they have deducted and remitted. Yesterday, we were talking about directors' fee, and I remember saying to us that the responsibility for deducting and remitting withholding tax on director's fee do not lie on the director. So chasing after the director is chasing after a win. If I am the director, Allah, I will pay. I'll send you back to where you're supposed to be. So it is the company that will get to go. However, if withholding tax have been paid on director's fee to directors, based on that information, we need to now go and look for the director and say, come and pay your personal income tax. So in that case, we now say, director, we have an evidence that withholding tax has been paid on your money, the one that paid. Come and declare other sources of income that you have, so that we can be able to compute appropriately and issue you a clearance. So what are the documents or what are the transactions that are subject to withholding tax? The list is endless. However, we have royalty, rents, including hire of equipment, dividend, interest, commission, consultancy fee, professional service fee, management fee, technical service fee, director's fee, construction of roads, building and bridges, contract fee, and contract of supplies. Sometimes some companies that have some consultants will just tell you that, see, rent is rent, right? For every other thing is a contract, so that you can pay 5%. Because the rate for different things differ. Management fee, if you're doing management or professional service and you're a limited liability company, it's supposed to be 10%. But if you just say it's a contract of decision making, we just pay 5%. So what are the documents for us to look at in the areas of doing this? We need to look at these documents. The documents are significantly the same, month in, month out, or different types of audits. We have documents. So when I was saying that our list for audits that we used to send to clients, the list is not exhaustive. The only thing I can say is additionally, if we can do our homework well, sometimes we will have to be more specific than having a general list. You understand? Because if you're going for payee, yes, okay. Yesterday I think we had we showed something that shows, okay, hey, the document that one of your colleagues brought out. You can see very, very rich, but you can see there's very focused on personal income tax or payee organization. Other documents are required, but the focus of it is this. So that's, you can be sure. So if you have additional focus on things like withholding tax, then we can now start looking at documents that looks like this: remittance of monthly withholding tax remittance. For us to be able to, then you can now start saying where is the schedule of commission that was paid, or where is the list of contractors that you have engaged, the list of contractors and suppliers within the states that are this. So So by the time you pick out all of this, you'll be able to validate your need for withholding taxes. Then for examination, you just need to check them one after the other. Okay, you claim that you are paid, you just examine the payment voucher and doing that. Then vendors compliance. What have you been paying on behalf of your vendors? Have you remitted on behalf of them? Then scrutinize rent payment. Some people will just hide around the rent anyhow. Verification, withholding tax, computation. Are we even doing the actual computation? Then financial statement review and other. These are the ways that we need to look at it. Like I said, director's fee is computed at 10%. That one do not need mathematics. It should be known. I have a rate here that is supposed to be dividend. Director's fee is 10%. Yes. Yeah. Okay. Capital gain tax. This, like others, we're supposed to go for lunch. Sorry. We're supposed to go for tea break, I think now. Yes, by 10:30. Just the tea break ready. You sure? You have one confirm. Yes. Sure. Tell them that they are coming. Okay, so let's look at this. What is capital gain tax? Data will not stop telling us about capital gain tax. Right? You're the one that brought it up today. Well, that's your area of expertise.
When he was trying to explain stamp duty, he brought capital.
You got it, capital gain tax. Okay, so what do we understand by capital gain tax? What's your name? Yes, stop looking inside.
My name? Ahmad.
Ahmad, you asked a question for the first time today. What do you understand by capital gain tax? Yeah, let's be fast. You can do.
Capital
Yes.
gain tax
Yes.
it's a process or an act that if you are buying, if you have a property, you are selling it for the purpose of gain. That is where government will demand. But if you are doing it for your own gain, for your own purpose of property, that means you have nothing to pay on.
Okay. Say that again.
Capital gain tax is a process whereby you have a property, you want to deploy for your own for personal use.
Okay.
That is government will not take anything. If you are deploying for the purpose or you are buying for business purpose, that's where government will demand.
Okay.
That's where
Government may ask for the
capital
gain tax. Okay.
Yes, sir.
Just a moment, madam.
Capital gain tax is an act that provides for the taxation of gains on assets that are disposed. So, when an asset is being disposed, if there is no gain, there is no even reason for capital gain.
What's your first course? What's your first course? First degree.
Geography.
Geography.
Yes, sir.
And you're a tax officer. Yeah?
There are other things.
Okay, what are the other ones? Tell me all.
Postgraduate diploma in management and MBA.
Postgraduate diploma in management
Yes.
and MBA.
Yes.
None of them dealt with taxation.
On the job experience.
So you have done more than.
Make myself.
You have done more than just that. Taxation is a 4-year course now, and taxation and those that did accounting, taxation and accounting is the same course load all through the years in school. So an MBA don't do taxation. I have 2 masters, 3 actually. I have 1 MBA, I have 2 MScs. I have MSc finance, I have MSc in economics.
So it depends on your area of specialization.
In MBA,
Yes. Because if you are specializing, there are certain areas if you are specializing, you will not take taxation.
in MBA.
Yes, sir.
Okay, which area will you specialize that you take
I
tax?
specialize. Under accounting, you will take taxation.
Yeah, but not as a course.
Yes.
It's part of accounts. That's what I'm saying. But the same course taxation that I was talking about is a 4-year course. It's like someone that did an MBA and said, I have done law. And all you did was business law or corporate law. Do you understand? It's not the same. But I'm not going to summarize it. So capital gain tax, which is covered under the company and allied under the Capital Gain Tax Act, cap number C1, Law of the Federation of Nigeria, 2004, as amended to date. Last amended was 2022 Finance Act. So it's just a flat rate of 10%, chargeable on all assets disposed. You understand? All assets disposed. Gains made from all assets disposed, less all incidental costs to disposal and acquisition, or less cost to acquire and incidental costs to disposal. So, and it's 10%. However, there is the rollover principle. Manaf, I hope you know that one too. Yeah, that one is not going deeper into taxation. There's the rollover principle. That means if I buy an asset for say 100 million, and for instance, the example we used yesterday, where I had said that someone bought an asset for 50 million or 10 million, sold it for incidental cost to dispose, maybe up to say 20 million or 30 million, sold it for 150, has a gain of 120 million. If he has such gain, 120 million is expected to be charged to capital gain tax. Insofar, he has not used the same money to buy the same type of assets. So, that is to say, a very smart business person will just buy the asset, or will just sell the asset for 120 million and buy another asset. We buy another asset that is equals to 151. So in that case, he has even invested more. Which one? Yeah, he bought it now. He just sold off and bought another asset. And even if you like, you can buy another one for 145 and now pay 500,000, 5% on the gain, which is on the road. You now pay capital gain tax on that. And you will ensure that the capital keep expanding. And if you're a very good businessman, that's assets that you have bought now, you will now use it to collect loan, do business, make profit, you now pay interest on the loan and pay no tax. Again, instead of you not paying taxes, you now go another more money against the profit that you make.
You are paying interest. Yeah. You are not going to be taxed.
Yes, no, that portion is not subject to tax. So that means you just keep investing your money. That there is no way you just keep reducing your tax liability. And you know, based on business ethics and principle of taxation, you have to pay taxes after you have done all expenses. That is why the rich keep paying less and the poor keep paying more. Okay, are there some people that are actually exempted from company income, capital gain tax? Yes. Or are there some transactions that are exempted? We'll talk about payee. I think it's including so we'll what are the items that are exempted? Declaration of valor, gallant conduct. So if you dispose of your medal that you won from Olympic 1996, they know that gold. If you decide to sell it, it's exempted from capital gain tax. With the recent adjustment to the Finance Act, if you sell off your cryptocurrency, you will pay capital gain tax. So, and you know that some of us bought cryptocurrency in 2017 when it was $1,000. And today, that one is $61,000. $61,000 for one crypto in Naira is about, you can only imagine. If you have a life insurance policy that is paid to you, Nigerian government security against certain organizations that are this, or this, they are exempted from capital gain tax. That is why it is good for us to go and set up educational institutes. If you set up a school, make sure that your school is not a limited liability company. Just set it up as an NGO. You won't pay company income tax. You won't pay VAT. You won't pay capital gain tax. You won't pay any tax. The only tax you pay, no, the only tax that will be demanded from you is the one that you are collecting from your teachers. Or what? Anything that you pay is not your money, it's someone else's money. Yes, anyone that you pay is someone else's money. As an agent of collections. So how do we now compute that? Computation of capital gain tax. See, sales posted by incidental expenses, no relief on losses, and cannot be offset against. If you have assets under the old principle, William, will you see which of them? How are you doing?
Fine.
Are you whistling? This one, under the old principle, if you buy assets, if you buy a land and you sold the land, you have a gain. You use the money for the land to buy a car. It is not, it cannot offset them against each other. It has to be for the same business, for the same class of assets. Not necessarily the same assets, but the same class of assets. That means you can sell a car and buy a truck. That means you can sell a generator and buy another asset that is same class.
What about the time in between the disposal and the buying of the new one?
But it has to be before the filing. Do you understand? It has to be before the filing of it. Because if you, and the law is so nice that only the people like data that can see it. You will see that you do not need to have even paid, just enter the contract before the filing period. And if you're a smart consultant, you enter the contract and you cancel it after the filing period. Do you understand? So when it comes to basis period in taxation, you now need to learn how to manage basis period to minimize taxation. You understand? And to take advantage of the loopholes. But as a tax auditor, you need to be able to know those parts. That come. This contract is not fully executed. As long as it's not fully executed, it is not admissible. But you need to know that before you can actually do it. So that is why it is good for us to be as detailed, if not more detailed, than the guys that you guys are always sitting on opposite side of the table. As much as tax guys are our friends, outside office, like outside office, everybody is friends. But when it comes to work, everybody deals with the work. Okay, I think we should just go and take our tea. Then we'll come back so I will not eat too much. I'm trying to see how we can consolidate. After this, we have only 3 different short topics like this.